present a financial analysis of 6 companies from different industries. I'm in a rush because I have not that much time. This analysis compares their financial performance for 2024 and 2025 using common size analysis and financial ratios. And as we can see, we have 6 companies selected for our financial analysis. They come from different industries, allowing us to compare their financial performance more effectively. And each company faces different industry challenges. For example, Nestle deals with competition and raw material costs, while our account focuses on technology and innovation. BWF and MISC are affected by manufacturing and shipping costs. And 7-Eleven depends on strong sales and inventory management, while Shangri-La Hotel is affected by tourism and economic conditions. The objective of this analysis is to compare the company's financial performances, profitability, and overall financial position.
Based on the analysis, AutoCount is the best company for investors because it has the highest share capital, increasing from 68% to 70%, and the lowest payables at only 18% in 2035. This means the company is financially strong and less dependent on debt. Nestle is the second strongest company. Its share capital increased from 53% to 55%, while payables decreased from 27% to 25%. This shows stable growth and good financial management. MIC and PWF Corporation Berhad show average performance because they have moderate share capital and payables. They are improving but not as strong as AutoCount or Nestle. 7-Elevens and Shangri-La Hotels and Resorts are less attractive for investors because their payables are still high, which means they rely more on liabilities. Shangri-La has the weakest position due to the lowest share capital percentage. Overall, investors would most likely choose AutoCount because it shows the strongest financial stability and the lowest financial risk. Thank you.
Next is common size analysis for income statement. So every line of item in this income statement, we converted it into a percentage of total revenue. So this action allows us to compare the operational efficiency and profitability of this company regardless of their actual size or industry they are in. So from the table, we can see that AutoCount leads the pack with 65% gross profit margin. This is due to the fact that software industry usually has lower cost of goods sold as compared to other industry. Household giant Nestle also maintains a stable 42% margin, which can be considered to be excellent actually despite the rising material costs nowadays, usually for cocoa and coffee, which is normal for Nestle. On the other end of the spectrum, we can see 7-Eleven has the thinnest margin but still a stable performance of 25% margin, which can be said to be standard actually for retail industry that relies on high profit volume turnover. Lastly, we can also be noted that all 6 companies actually shows a very good improvement in their gross profit percentage from the year of 2024 to 2025.
This slide evaluates the financial health of 6 companies using a short-term and a long-term solvency matrix. On a short-term solvency, a current ratio below 1.0 signals a liquidity risk. Nestle Malaysia at 0.52, 7-Eleven at 0.61 and Shangri-La Hotel at 0.86 all fall below this, indicating a potential difficulty in meeting a short-term obligation. In contrast, AutoCount.com Berhad shows a strong liquidity with a current ratio of 2.73 followed by MISC Berhad at 1.83 and BWF Corporation at 1.48. The cash ratio reinforced Nestle's near zero ratio of 0.0022 is particularly concerning, while MISC lead at 0.93. On a long-term solvency, AutoCount has the highest total debt ratio at 0.7265, followed by Shangri-La Hotel at 0.7045. However, the equity multiplier reveals a different story. Despite its low debt ratio of 0.0445, 7-Eleven has an extreme equity multiplier of 7.57, reflecting a very low shareholder equity. Nestle followed at 6.32. MISC Berhad report an unusual low equity multiplier of 0.37, warranting a further review. In summary, Autocar and MISC demonstrate a stronger short-term liquidity, while Nestle and 7-Eleven show a significant solvency risk.
Next, I will compare the asset management performance of all 6 companies, focusing on receivable turnover and total asset turnover. Overall, BWF Corporation records the highest receivable turnover at 20.6562 times, followed closely by Shangri-La Hotel at 20.61 times. This is then followed by 7-Eleven Malaysia Holding Berhad at 16.7435 times, indicating strong efficiency in collecting receivables for these companies. Nestle Malaysia Berhad records 13.9858 times, while Autocom.com Berhad records 13.0778 times. MISC Berhad shows the lowest receivable turnover at 1.97 times, indicating weak efficiency in collecting payments from customers. For total asset turnover, Nestle Malaysia Berhad records the highest ratio at 1.8869, showing the most efficient use of assets to generate revenue. This is followed by 7-Eleven Malaysia Holding Berhad at 1.2358 and BWF Corporation at 1.0323. While Autocom.com Berhad records 1.0002, Shangri-La Hotel records a lower ratio of 0.4167, while MISC Berhad again records the lowest at 0.21, indicating inefficiency use of total asset.
Today, I will present the profitability and market value analysis of 6 selected companies. Consists of Nestle Malaysia Berhad, Autocount.com Berhad, BWF Corporation, MISC Berhad, 7-Eleven Malaysia Holdings, and Shangri-La Hotel. First, for profitability performance, Autocount.com Berhad recorded the highest profit margin at 41.25% and the highest return on assets, or we call as ROA, at 41.26%. This shows that the company is highly efficient in generating profit and utilizing its assets effectively. In contrast, 7-Eleven Malaysia Berhad achieved a moderate profit margin of 16.44%, but its return on assets was only 1.21%, indicating lower efficiency in asset utilization. Overall, Autocount.com Berhad demonstrated the strongest profitability performance, while Nestle and 7-Eleven showed stronger investor confidence in terms of market value. Therefore, investors may consider both profitability and market perception before making investment decisions.
In conclusion, the financial analysis indicates that each company performs differently according to its industry environment and management strategy. Among all 6 companies, Autocount.com Berhad emerges as the best investment choice due to its strong liquidity position, highest profitability ratios, and efficient financial management. Although some companies face challenges in liquidity, leverage, or operational efficiency, most companies still showed improvements in profitability and financial stability in 2025. Therefore, financial ratio analysis and common sense analysis are important tools to evaluate the company's financial health, operational efficiency, and investment potential before making any investment decisions.